Retirement Checkbook. Today we're going to talk about the Checkbook IRA and Solo 401k, so how you can take full advantage of your retirement funds and have them available at the tips of your fingertips. So let's get started. So a little disclaimer before we get going. AccuPlan, we are not a broker-dealer. We're not financial advisors. All information and materials here are for educational purposes only. We don't recommend any types of investments, so please contact your professionals for that. A little bit about myself. I'm Brian Davis, Director of Business Development with AccuPlan here in San Diego. You can look me up online at accuplansandiego.com or IRAwithCheckbookControl.com or Solo401k.services. I'm originally from Northern California. My parents are rice farmers up in the Yuba City area. And I went to college in UC Santa Barbara, and after college moved down to San Diego, where I got into the mortgage business and was in that from 2002 through 2007, mostly doing subprime loans in a builder division. And in 2007, as most of you know, the real estate market and subprime loans took a big hit. And shortly after that, I found my way into doing the self-directed IRA and have been doing that pretty much ever since. The last 3 years, I've been with AccuPlan. AccuPlan is one of the premier providers of self-directed retirement plans. We offer traditional Roth, SEP IRAs, simple IRAs, and solo 401k services. And we're able to do this because of our affiliation with our custodian, American Estate and Trust, which is a trust company out of Las Vegas, which is what allows us to be an IRA custodian. So individuals are using our custodial services to purchase things like real estate, notes, investments into private funds, and into precious metals. However, what we've seen a lot over the last few years is the rise of the checkbook IRA. And this can come generally in a couple forms, either a checkbook self-directed IRA or a self-trustee 401k plan for the one participant employer. So this allows you to invest directly into real estate notes without having to go through the custodian every time. So first we'll talk about the self-directed checkbook IRA, and then we'll move over to the 401k plan. So let's look at the checkbook IRA. The checkbook IRA we're generally seeing available in two options of entity types. One option is the LLC. In this format, your IRA becomes the member of the LLC, and you make yourself the manager of that LLC. If it's a single member entity, like the one we described, one IRA owns it, it's what's called a single member or pass-through or disregarded entity, so federally it doesn't have to worry about paying taxes. However, especially for those of us in California, you are going to have to file with the California Franchise Tax Board, and there is a fee of $800 a year plus a gross receipts tax if your gross receipts are over $250,000. So what we've seen then is a rise in a different entity structure that we're going to talk exclusively about today, and that is the business trust. In this format, very similarly to the LLC, you're going to have control of the IRA funds with a bank of your choice to make direct investments without having to go through the custodian every time. Now, on a federal tax basis, the business trust is treated as a partnership, just as an LLC. So that pass-through single member entity still applies if it's just one member, so you don't have to file. In either case, whether the LLC or business trust, if there's more than one member, let's say a husband and wife's IRAs are the members, then it does have to file a return, a 1065 return. But if the IRAs are the members, it shouldn't have to pay a tax there unless some other tax could apply. The good thing about the business trust is you don't have to pay the franchise tax board or the gross receipts tax. That's why this option has become so valuable for those folks in California that want that full checkbook control with their IRA. It also doesn't need to file articles of incorporation like an LLC, so there is a little bit more anonymity there, being that you don't have to file that and that's not on file somewhere. Now, on a state level, it doesn't have to file a return if it's a single member entity. However, if there's more than one member, husband and wife, it does have to file a return, what's called a 565 return, but it still doesn't have to pay the California Franchise Tax Board fees. So that's where we're going to get started here with the business trust. So as this slide points out here, the primary purpose of the business trust is to simplify administration. You don't have to go through the custodian every time for approval. For those people buying properties, especially buying properties with a loan on it, there's a lot of paperwork involved. A lot of back and forth has to happen between the IRA custodian, you, the IRA holder, the title and escrow, and closing the documents. And this can take days upon days and cause a lot of stresses. And there's a lot of little fees that sometimes start adding up when buying real estate in an IRA with payments going out, especially if there's a non-recourse loan involved. Those payments can start adding up over time, and sometimes it can be tedious getting payments out. So the business trust will allow you to make investments from a bank account of your choice so you can close on that transaction directly yourself. So the business trust, you can use it individually, as I've been mentioning. You can also have more than one member there. So if you want people to, theoretically join the business trust to invest, that's one way to do so. But that's not entirely what we're seeing every time. So let's get into the aspects of the business trust. Its primary document is a declaration of trust. And one part of the parties there is what's called a grantor or settlor or trustor. In this case, that would be your IRA, because it's going to be the party transferring assets into the business trust. In this case, IRA funds moving into this business trust. After the IRA has moved the funds over there, the IRA owner gets to take control of those funds, and that would be the trustee function. The other function is the beneficiary. That's the owner of the beneficial interests of the business trust. That, again, it's your IRA. So the business trust is set up to make money as an IRA investment, and it's going to have broad powers and rights, but not exclusive. The exclusive rights, that's going to go to the IRA holder, and that's going to achieve checkbook control for you. So again, in that declaration of trust, we'll be naming you, the IRA owner, as the trustee. So it's going to have broad powers and rights. Some rights are still left to the IRA, but you can make yourself the trustee to make the investments. Now, you can't receive any type of compensation as you're a disqualified person from your IRA, but you can still act as trustee as long as you're keeping in regards to all the rules on prohibited transactions and disqualified persons, and hire unrelated third parties for their services. So once we have this business trust set up, we are going to get a tax ID number for the business trust. This will enable you to open up a bank account at your bank in the name of the trust. You are the trustee. You're going to declare that there is a declaration of trust with your bank. The IRA, like I mentioned, is the trustor or grantor, and the trustee has all authority to open the bank account. You'll get a full copy of your declaration of trust. The bank shouldn't ask for it, though it seems they do a lot of the times, and then we'll wire the funds as the IRA custodian to that bank account, which you're the trustee of. Again, tax purposes, it's taxed as a partnership, and it's a business entity. And since it's not formed under a corporate statute, it's classified as a partnership. It can be a disregarded entity if only one owner. So again, no minimum franchise tax, no total income fee, which is in regards to gross receipts tax. And if there's just one member, it's a disregarded entity, and no state income tax return filing is needed. So that is the main part of the Checkbook IRA through use of the business trust. And I can help you set one up so you can take full control of your IRA. The other plan I want to point out is the one participant 401k plan. You might hear it called a Solo K or Solo 401k. At AccuPlan, we call ours the 1K. So how this works is a 401k plan is what's considered a retirement savings trust. And these are for the self-employed individual with no full-time W-2 employees besides themselves, and a spouse does not count in this case as an additional employee. So this could be, there could be a spouse involved too, and there could be two people under these one participant plans. So it doesn't matter if you're a sole proprietor, you're set up as an LLC, a corporation, or a partnership. You can create your own 401k plan if you fit this mold. You can roll over any of those old retirement dollars, 401k plans, traditional SEP, simple IRAs, into the plan and start investing. And there's some benefits of the 401k plan over the IRA as well, which I'll get to in a second. But first, one of the things is the large contribution limits. You can contribute up to $59,000 a year, depending on your gross income for your business. There's also a Roth feature. Part of the deferrals of those contributions per year can be after tax, or what's called a Roth deferral. So you can have Roth funds in there as well. Another highlight here is you can loan yourself individually up to $50,000 as a plan participant loan, because you're also the employee of this business. And one function here I want to point out, UDFI, that stands for Unrelated Debt Financed Income. So if you're buying one of these properties and using a non-recourse loan, in an IRA, the IRA is subject to a small tax based upon the percentage of debt financing used. Well, the 401k plan is exempt from that tax. So if you fit this mold and you're using a non-recourse loan, this plan is going to avoid having to file that tax and pay that tax. So let's get back into those, how you can make those annual contributions. You can contribute as an employee up to $18,000 a year as what's considered employee deferral. So if you're W-2ing yourself, it would be out of your W-2 pay. If you're Schedule C, 1099, it's going off of your adjusted gross income. As long as you have that much adjusted gross income, you can make that deferral. If you're 50 and over, you can throw in an extra $6,000, making that total $24,000. And then there's what's called the profit sharing contribution. If you're W-2ing yourself as a self-employed business, it's up to 25% of your W-2 pay. Or if you're in that LLC sole proprietor model, it's based off of 20% of your adjusted gross income. So the combination of that employee deferral and the profit sharing match is $53,000, or if you're over 50, that extra $6,000 catch-up contribution allows that to go all the way to $59,000. And if there's a husband and wife type situation going, you can add that together, $118,000 potentially per year. So this plan allows you to purchase real estate, you can loan yourself money, you can do on and on with the IRA and 401k. Again, the 401k plan, it's a self-trust deed plan. So we set up a 401k plan for you. You can invest directly into the investment from the 401k plan, or you can use a business trust as well if you do want some more anonymity for the plan. Most of my clients are probably just investing directly from the 401k. They're using the business trust for the IRA than to do the investment because the setup is a little bit different. So this doesn't matter if you have a corporation or not. You can create one. You don't have to create one. But you can roll over any of those pre-tax IRA dollars to the plan, start making new contributions, and invest directly into it. Again, here's my contact information. I'm Brian Davis with AccuPlan. You can reach me at 619-432-4555 or check out my emails, accuplansandiego.com, IRA with checkbookcontrol.com, solo401k.services, or always email me at briandavis@accuplan.net. Thank you, and hope this was helpful. Have a good day.